So this week, this education video will be on the USD Canadian. Let's repeat one more time, USD Canadian. Why I choose this pair? As we know that if you go compare to other currency pair, US dollar has not been doing very well. All right, mainly it's because due to infinite QE, a lot of money printing to pump into the economy to save the economy due to this pandemic. All right. Second is because Fed decided to keep the interest rate low, as most of the investors know out there. There's no way that they're going to hike the interest rate. So when interest rate low, USD will weaker. So why do I choose USD against Canadian this pair? Okay. So first of all, based on TA, we can see that USD has been plunging since March. All right. So based on the chart itself, we can see that on the daily chart, it actually break above this resistance line. Can you see that? And there's some significant pullback. And right now, I'm looking to long USD Canadian. My stop loss will be at whole round figure 1.3 for USD Canadian. All right. So why I choose Canadian? And the education for this video is because Canadian is highly, last time, I mean previously or theoretically, is very close related to oil. You can go and Google more about it. You can Google how oil move with USD Canadian. All right, I like baby peeps. This is where I learned my forex from. All right, you can see over here, if US demands rise for the oil itself, manufacturer will need more oil to keep up the demand. All right, this lead to the rise in the oil price, which might lead to the fall in USD Canadian. Why? Because they need more Canadian dollar, right? So when Canadian go up, USD will come down. Understand or not? That's why USD Canadian will fall if the price for oil go up. But right now, if the demand for the oil demand fall, as we know, look at the news itself, oil demand recovery stopped. So if the demand for manufacturers will stay aside, all right, they don't need to buy more oil. So if let's say they are not going to buy more oil, the demand for oil fall, USD remain. No one want to buy Canadian dollar, so eventually it will go higher. All right, USD up, Canadian down. So oil has a negative correlationship with USD to Canadian, 93% between 2000 to 2016. All right, so why? Of course, like I say, people say 2016. So what happened right now? But it's somehow still significant. Why? It's because Canadian, take note, Canada economy is depend on export, with about 85% export going to the big brother down south, the US, because Canada is the largest supply of oil to US. Can you see that? US crude import by country. All right. So this is why US Canadian is close related to oil itself. All right. So I'm looking on USD Canadian to go up based on this chart itself. But like I say, disclaimer apply. So take note, if you can't trade, then stay away. Next thing, I'm going to input in compare US oil, and we shall see how the chart moves. All right. Let's see. And I remove all my indicator. All right. So we can see. Okay. Can you see over this point in March? All right. When demand go lower, all right, oil actually drop. Right now we are comparing to oil. This is WTI. Oil drop. No one want Canadian. USD went up. Can you see that? So it's a negative correlation at this point of time. So they believe at this point of time, when somehow they believe market to start coming in, demand coming in, when oil went even higher, Canadian stronger, so market drop. The USD Canadian drop. So at this point of time, if demand is going to fall again, where shall we be looking at US Canadian? Is your take from this education video. All right, so that's all for my education video. Hopefully you learned something from this FX correlation pair with oil. That's all. Thank you very much, everyone. Have a nice day. Bye bye.